Right. So coming to the next case study from the chapter number 5 itself, as per the study material, that is audit evidence. Okay. Right. So what does it say? Trustworthy Real Estate Private Limited with Mr. Bharose Lal as the managing director, along with his wife Maya, owned the company. The company has floated one SPV, Real Trust Developers Private Limited, in which a foreign entity became a joint venture partner with a 50% stake. The venture was formed with its head office in Mumbai to invest in the SRA, the Slum Rehabilitation Authority, and develop them into commercial units for sale. Bharose Lal was going through a rough patch in his life. He was in financial difficulty and had mounting dues and huge outstanding exposure to banks and suppliers in his companies. Mrs. Maya was from a very wealthy family and had fallen in love with Bharose Lal, who was from a middle class family. Mrs. Maya had an expensive lifestyle and was always short of funds to maintain her lifestyle. Mr. Bharose Lal sensed a golden opportunity in the new venture because the foreign partner had no knowledge of the Indian regulations and how the SRA projects work and was solely dependent on the local partner to get all the permissions, scouting for the project, getting consent from the slum developers for the project, giving contracts for the construction of projects and such matters. ABC and company chartered accountants were appointed as the auditors of the joint venture, and the engagement team was headed by C.S. Skeptic, who at his stint with the firm was instrumental in unearthing two major frauds and had the ability to sniff out any such scenario. Mr. Bharose Lal has a dominant personality and has a powerful influence on functioning, and everybody looks to him for his guidance. The governance structure was very poor in the organization, and Bharose Lal used to dictate the decision. Even though as a part of the joint venture, there was a detailed governance structure and policies and procedures in place for the decision-making process at the joint venture. However, the representative on the board of the joint venture of the foreign partner who had shifted to India to supervise the SRA project had grown friendly with Bharose Lal, and Bharose Lal had even gone out of the way to help him to get accommodation and a second-hand work. Often they both go to club in the evening for a drink. The dealings in the SRA project are not very transparent and above board, but very transparent and above board are very opaque. Given the below above situation, Skeptic wants to discuss with the audit team areas and situations where RMM is possible and there are chances of having an undisclosed related party relationship to misappropriate the funds, right? So again, we have the theoretical questions and the MCQ. So again, let us first look into the MCQ. Which of the following set best describes the method that Bharose Lal can indulge to commit the fraud? Conceal and not disclose that could affect the amounts recorded in the financial statements, engage in complex transactions that are structured to represent the financial position or financial performance of the entity. So all these are ways to commit fraud, but which is the method which best describes, which could be used by Bharose Lal? Cause an entity to pay for goods and services not received, using undisclosed business partners to misappropriate funds in the garb of making a business transaction and then siphoning of the funds. Yeah, this is the most possible method by which Mr. Bharose Lal could commit the fraud. In the given scenario, the main factor giving rise to the RMN is the expensive lifestyle of the Mrs. Maya, appointment of an auditor having experience in unearthing of the funds, deteriorating financial condition of the owner's business, the vulnerability and the dependence of the foreign partner on the local partner, that is giving rise to the RMN. In the given scenario, which is the most important red flag for the auditor, right? Which is the most important red flag indicator of fraud for the auditor? Expensive lifestyle, undisclosed related party relationships to siphon off the funds, financial crunch, dominant influence of the owner. So obviously the most possible opportunity to do the fraud is to the undisclosed related party relationship to siphon off the funds. And which of the following is not a fraud risk factor? Dominant influence of the owner, expensive lifestyle, fraud risk due to the nature of the industry, floating of a new SPV itself. So just because you float a new SPV, it doesn't become a fraud risk factor. But yeah, dominant influence of the owner, there could be the, what you say, opportunity to do the fraud, expensive lifestyle, there's a pressure to do the fraud, and fraud risk factor due to the nature of the industry. Again, it's an incentive pressure to do the fraud. Okay, right? So these are the MCQs. And now let us look into the theory questions. Okay. Please guide the engagement team on the further course of action as per SA 550, that is related party. right? So engagement team will include consideration of the possibility of the financial statements to material misstatement due to fraud or error that could result as a result of the related party relationships and transactions. Right, so as an auditor, the nature and extent of the related party relationships transaction as identified independently by the auditor by verification of the MV1 data and the data available on the MCA website related to the directors and the company. So one, he needs to verify the data relating to the related parties from an independent source. Then an emphasis of the importance of maintaining the professional skepticism regarding the audit, regarding the potential for material misstatement through related parties. The circumstances or conditions of the entity that indicate the existence of related party relationship transaction that management has not identified or disclosed to the auditor. Example, the complex organization structure, the special purpose entity, off balance sheet transaction, or an inadequate information system. Then directly ask, indirectly you check the records and documents that can help you identify the existence of related parties. Then the importance which management TCWG attached to the identification, accounting and disclosure of the related parties relationship transaction and the possibility of the MOC, the management override of the control. Right, so what does it say? Please guide the engagement team on the further course of action. So what is the further course of action? You tell them to check from an independent source. Then you also tell them to be skeptical, to be alert. Then after that, you also try to find out the unidentified, undisclosed related party relationships and the transaction. For that, what you do, you verify the records and documents, including the, right, you also check how the management, how much importance they have given to identification of related party, and also whether there is any risk of management override of control. Right. In addition to 550, they also talk in the context of the fraud, may include consideration of how related parties may be involved in the fraud. Right. Special purpose entities controlled by the management might be used to facilitate the earnings of the management, and how transaction between the entity and the known business partner could also result into the misappropriation of the asset. Right. An exchange of ideas amongst the engagement team members. So there has to be a discussion amongst the engagement team members about how and where they believe the entity's financial statements may be susceptible to fraud, how management could perpetrate the fraudulent financial reporting, right? Do it and conceal it, and how the assets could be misappropriated. So they misappropriated. So there has to be a discussion amongst the members of the team, a consideration of the circumstances that might be indicative of earnings management and the practices that might be followed by the management to manage the earnings that could lead to fraudulent financial reporting. So, any possibility of the fraud in accounting. Then a consideration of the known internal and external factors affecting the entity that may create an incentive pressure, right, or may provide an opportunity to commit a fraud. So you need to check whether there is any FRS, fraud risk factors. Right, this FFR is fraudulent finance. Yes, what you say, the fraudulent financial reporting. FRF is the fraud risk factor. Then a consideration of the management's involvement in overseeing the employees with access to cash and the other assets susceptible to misappropriation. So consideration of the management regarding the overseeing the employees. Then a consideration of any unusual or unexplained changes in the behavior or lifestyle of the management or employees which have come to the attention of the engagement team. Right, so this is also a chance, a fraud risk factor relating to fraud, change in behavior, lifestyle. An emphasis on the importance of maintaining a proper state of mind throughout the audit regarding the potential for material misstatement due to fraud. Then a consideration of the types of circumstances that, if is encountered, might indicate the possibility of the fraud. A consideration of an element of unpredictability to be incorporated in the nature, timing, and extent of the audit procedure. A consideration of the audit procedures that might be selected to respond to the RMM due to fraud, and what audit procedures are more effective than the others. A consideration of any allegations of fraud that have come to the auditor's attention, and a consideration of the risk of the MOC, that is the management override of the control, right? So what does it say? These are all the considerations for the auditor. You look at all these points, what are they saying? These are all the points regarding the consideration for the auditor. Okay. Then next one, what are the fraud risk factors in the given case? So incentive pressure, opportunities, and the attitude rationalization. Right? So fraud risk factors are events or conditions which either give an incentive pressure or they provide an opportunity to commit the fraud. Right? So instead, the fraud risk factors are classified based on three conditions that are generally present. One, there is an incentive pressure to commit a fraud, or there is an opportunity, or there is an attitude rationalization. In the given case scenario, the following fraud risk factors can be segregated in two conditions of the incentive pressure to commit a fraud in a perceived opportunity to and the perceived opportunity to commit the fraud. Right. So what is the incentive pressure to commit the fraud? Right. So incentive pressure to commit the fraud. What does it say? It comes from the financial difficulty. So that is why they have an incentive, a pressure to commit the fraud. The expensive lifestyle, again a pressure to commit the fraud. Requirement to fund 5 crore as equity contribution in the special purpose vehicle. Again, there is an IP, an incentive or a pressure to commit a fraud. And then second part talks about the opportunity to commit a fraud. Where does the opportunity come from? It says dependence on the foreign partner and no knowledge of the foreign partner of the local laws and the SRA business model in India. The risk is due to the way the real estate industry functions and particularly the risk relating to the SRA business model and the dominant personality of the Bharose Lal, which can lead to the MOC for the undisclosed business relationships with the Useless and Sons Private Limited. Right, so that is the incentive pressure and then the opportunities to commit the fraud in the given scenario. Right. Given the situation that each partner in the joint venture has to bring into the entity a contribution of 5 crore each and given the situation that Bharose Lal had appointed one agency, the name Useless and Sons Private Limited, to get consent from the slum dwellers, for which the agency was paid 20 crore as a kitty to get the job done. See, a skeptic inclines that there is some connection between the 20 crore paid and simultaneously within a short span, the infusion of 5 crore as equity contribution by Bharose Lal. Please guide CA skeptic in establishing the link based on the available guidance in 550 and 240. What additional audit procedure does his team need to undertake for the conclusion? Right. So if the auditor identifies any unidentified, undisclosed related party relationships or transaction, which could also be called as the NERP, the newly identified related parties, jaldi se, promptly communicate the information regarding the newly identified related parties to all members of the engagement team and also to the management. Then request management to identify the transaction and the failure in their control. Then you substantive audit procedure. Then also consider whether there are any such more unidentified related parties. And if the non-disclosure appears to be intentional, then you also consider it to be a fraud risk in the audit. Right? So auditor needs to carry out the verification and inspection of the ownership structure and review the financial statements of the Useless and Sons. Auditor needs to carry out the inspection of the data file. The auditor needs to ask for the documents for the utilization of the 20 crore and can investigate by visiting the parties involved and ask for the confirmation directly. Okay, so many a times I see AI in their exam paper, they put the direct questions from the ICI study material, right? So this is our audit procedure, first response which we study in essay 550 regarding the newly identified related parties. This question was also asked in the November 24 exams. Okay. Next one. If based on the additional audit procedures undertaken by skeptic, it is established that there is a likelihood of misappropriation of funds, and as a whole, the financial statement may be materially misstated. CA skeptic needs to plan the further course of how CA skeptic needs to plan the further course of action. Right, so auditor has encountered the exceptional circumstances that bring into question, that whether he should continue with the audit or no. Then one, he has to determine his professional legal responsibility, and second, consider whether it is appropriate to withdraw from the engagement. If he decides to withdraw, one, the reasons for withdrawal he has to communicate to the management TCWG, and second, consider the professional legal requirements with respect to such withdrawal. Right, so that is again a question from the essay 240. Okay, and the earlier one, that was a question from the essay 550. Right, so we've completed the MCQ as well as the theoretical questions for the case study 2 from the chapter number 5 as per the study material of the ICAR, which is regarding the audit evidence in the CA final audit paper.